Hey, hey, hey.
Hey!
Hi.
Hi, everybody! That was funny. We both put up both hands at the same time.
Right.
We've been working together
Today,
too long.
right. Today's one of those days, we got the weather change. Weather acting up. We got the time change is what I was trying to say.
Yeah.
It's a little different.
I don't think everybody's quite gotten used to the time change yet.
Yeah. Just got to try. But even before, I was feeling kind of tired before the time change. So now it does seem I do feel a little bit better, but
Hmm.
it's water cooler Wednesday.
It is! Whoop, whoop!
All right.
That's
So
this is what we've been
welcome,
waiting
welcome, welcome.
for. This
What?
is what we've been waiting for all week, y'all. Hey!
Right. It's a great time to definitely come and sit and chat with you guys about some great topics. And this week we're gonna talk about the veterans because tomorrow's Veterans Day.
Tomorrow
And
is Veterans Day.
yeah, I don't know. I don't get the day off, but maybe some maybe some of you guys do, but don't get the day off. But we thought we'd share with you about veterans loans, and the things you can do if you're a veteran, right? A lot of people have these that our veterans are looking for homes or maybe interested in a home and they don't really know what's a VA loan. Like,
Mhm.
and what can I do with the VA loan? Who
Right.
qualifies for the VA loan, right? So we just want to join you all today and talk a little bit about that and share with you. So what we do ask is that do us a favor, share and like our posts.
Like
So
the
let
chat.
other people know we're out here. We ask you share with other people so they can see all the great things that we're offering. And if anybody wants to come and join our group, they can always come join us at the Water Cooler Wednesday Facebook group.
Yep.
Mm. And we're also on YouTube, guys. So you can
We
also,
are. We
yeah.
famous.
We on YouTube. So
We
if
just
you,
taking over the internet.
right, so if you can't find us here, you can always go back and look at old videos on YouTube. And so for all the topics that we've talked about over the last pretty much almost 40 weeks. So we've been here a while, y'all.
It's been a long day.
Yes, yes,
Dang.
yes.
Wow.
So all right. So what's a VA loan, Lisa? Or should we introduce ourselves?
Well, I mean, we might have some people that don't know us. I mean,
Right.
we internet famous, so obviously we on Facebook, YouTube, and everything. So, but for the few people that might not know who we are,
You're right. Because we're viral. Right. So let's start with me. My name is Dion Branch, and I am with eXp Realty. And I have my co-host, and I'm not going to put my finger up, but my co-host over there, uh, over there, right, right. Lisa, House Money Mama.
yep, from Nexa Mortgage, where brokers are better, we do what y'all need to get done.
Yes. So you can always, if you need to get in touch with Lisa, this is her phone number. And if you want to get in touch with me, here's mine. So what's a VA loan, Lisa?
So a VA loan is that special kind of loan for our veterans. So I just want to say, I know this always sounds a little bit cliche-ish, but thank you for your service. If you are a veteran, and even those families of veterans, because it takes a special family to be able to support a veteran and deal with the long times away and things like that, and just not knowing what could be going on with them. They could be get deployed, just anything like that could happen. So I'm realizing, because now I have a son who just recently enlisted earlier this year, and there's everything with the government is cryptic. They don't tell you nothing.
Yeah, right.
So it take a special kind of special to deal with that. But
Right.
so
So you have to support your family even though you don't know what's going on. And
yeah,
that's difficult. Mhm.
it can be. So just thank you to the veterans for your service. So obviously, as a veteran, there are going to be some things that people are able to take advantage of, because there are benefits of being a veteran, being giving your time and your service to the United States of America. So one of those things would be a home loan. So a home loan for a veteran is designed not to help you to invest. Some people think that veterans VA loans are designed for invest. They're really not. They're designed to help you be in a home of your own. Like, this would be the home that you will live in. That's what it's designed for. So there are some special things that I personally really like about the VA loans. One of them being that the VA loans do not have the PMI. So if you've ever heard of a mortgage loan and you've heard that PMI, we've talked about it on Water Cooler Wednesday before, but just to kind of recap, PMI, that stands for Private Mortgage Insurance. And basically, I think of it as like an insurance policy for your mortgage. The only thing is, you don't get to collect, it's for the lender. So
Mhm.
it's actually one of those things that makes the government loans, such as FHA and VA, more appealing, because even though they may be government loans, the government is really not the one giving the money. It's still the lender that's providing the funds in order to be able to acquire the house or to refinance the house. So to make the loans more appealing to a lender to invest in, then they have special parameters that they have, tied to the loan. So with FHA loans, and even with conventional, if you're less than 20%, you have something called private mortgage insurance, which basically is designed to, it helps the lender to be able to recoup. So something like that is kind of already built into a VA loan. They don't have the extra cost for the PMI, but a VA loan is actually considered a guaranteed loan. Now, what that means is that there's a portion, I believe 25% of the loan amount, that's guaranteed to be repayable to the investor, whoever is the company that actually puts the funds up and is the lender for the loan.
Mhm.
If something were to go awry, and if the veteran were, to default on the loan, then at that point, then the government would step in, and they would actually help the lender to be able to recoup 25% of whatever that loan is. So
Okay.
so that, of course, it makes it a little bit more it's more appealing, it's more sexy. Like, hey, I'll put some money behind this loan, because I'm not taking as great of a risk as I am with the conventional loan, because conventional loan, if they don't pay, then I just lose. So that's one of the reasons why a VA loan is more appealing. The other thing about that is that with the PMI, the PMI for a VA loan is not there. For an FHA loan, for a conventional loan, if it's less than 20%, you're going to have to pay PMI. So that's additional cost. And depending on the size of your loan, that could be several $100s per month additional that you will be paying. VA loans do not get that. They don't have to pay the PMI.
Okay.
So
So
that's one of the benefits of it.
so with the VA loan, I hear something like they don't have to put any money down.
There you go. That's another thing about the VA loans. They are one of your few 100% loans. You're not required to do a down payment for the loan. Now, don't get me wrong, because sometimes this can be a little bit confusing. You still have to do earnest money. If you're buying a house and you need to put down that good faith money to let the seller know that you're serious about the transaction. So there's a couple of different ways we can handle that. We can put that into the loan, but usually what we do is, so it is actually 100% loan, we actually put it towards your closing costs and use it for that instead.
So you won't have any down payment, but you could have closing costs, which are like your attorney fees, title, things like that, right?
Yep, absolutely. Every loan, don't believe the hype. I know people want to say, "Oh, well, I didn't have to pay." No, well, no, it got paid
Mhm.
because title companies are not in, business to do loans for free. Neither are lenders. Neither. You know what I'm saying? Like everybody, the reason why we have closing costs is because for everybody's work that they do on the loan file, there
Right.
has to be some compensation. Companies get compensated for what they do. This is our livelihood. So yeah, there's definitely going to be some closing costs that are going to be involved in your file. But a lot of times, um, we have a tendency to we want to try to help the veterans, which I think is a great thing. So a lot of times, if a person is willing to accept the VA financing, they will, like the seller, they may do credits that will help to go toward the closing costs to bring, their cash to close amount down for the veteran. Me as a lender, I do the same thing. I try to do an interest rate that makes sense where I can be able to give a lender credit at closing so that they don't have to bring as much to the table. If I can have a veteran that comes to the table with $500 or less, that is a great day for me because I feel like I've done, them a great service because of all that they've done for us. So,
Yeah, yeah, yeah. So who qualifies for a VA loan? Like who can get a veterans loan, VA loan?
but yeah, you got to be a veteran. So let's see. They actually do have you have to have a specific amount of time in, I'm pretty sure. I think it's so I know, like, so for my son right now, he doesn't qualify at this time for a VA loan because he really hasn't been in service long enough. So like when you first sign up to enlist in the armed forces, you don't you don't immediately get those benefits. So like your basic training, your tech school, that kind of stuff, that actually does not count toward you being able to qualify for a VA loan. So they have their own restrictions and stuff, that you have to follow. I think it's 180 days, maybe it's after 181st day, I believe, that you
Hmm.
have to have been active in service. It doesn't mean that you have to have been in war, but you just, have to be 181 days in to the service after your basic training and your tech school. So I know you have to do that. They do have special requirements, like for people that have been in active duty and things like that. If they've been in wartime, they have special requirements for things like that. Now, what I would say, a lot of veterans don't do this, or veterans, family members and loved ones use their site. They have the VA has a great website that you can go to that has a ton of information. You can basically go on and figure out what it is that you need to do to apply for a VA loan. You can figure out other things that they have because veterans can also do that. What's it called? The GI Bill, where
Right.
they go to college without paying for college, or they have like so much that they'll pay on their behalf for that. So if you are not already doing this, but you know a veteran, you're related to a veteran, the mother, father, of a veteran, whatever. Definitely use their site because they have a lot of really, really, really good information. For me as a lender, when I'm looking at qualifying somebody, there's a couple of different things that I'm going to ask for right up front. One of those things is going to be, excuse me, the COE. COE stands for Certificate of Eligibility. So I'm going to ask you for that. If you're ready to apply for a VA loan, you're going to have to give that to me and if you don't have it, then we can work together to figure out how to get it. There's a way that as
Hmm.
I can help you to obtain it. But I'm definitely going to need the the COE, and I'm also going to need a DD 214, which is like I'm trying to figure out how that's a good way to put it. It's almost like your resume for the services, whatever branch of the service you're in. That the DD 214 is like your resume for that. So it's going to tell when you enlisted, how long you were in, what you did, how you were discharged, were you honorably or dishonorably discharged, all those kind of things. And the COE, the Certificate of Eligibility, is basically just to show what your entitlement is for. full entitlement for a veteran is going to be $36,000. And I know that sounds weird. Like, what can you do with $36,000? Well, you have to keep in mind with what I just explained in regards to the 25%. The $36,000 is designed to be a fourth of the 144, which is the max that they'll be able to do for entitlement. There are some changes in 2020. I'm pretty sure that they removed the cap for VA loans. So whereas it used to be a like a loan limit that they had for VA, they don't have that anymore.
Oh, okay.
Yeah, it was new information for me too, because I don't do a ton of VA business, but as a lender, some things I have to look up if I, just to be abreast of what's going on currently. So there is actually no loan limit from my understanding. If it makes sense and you can afford it, by the way of the debt to income ratio, which is instituted by the lender, then you can take that loan as long as they don't feel like it's too much, for you to be able to qualify with.
So my dad has a VA loan. It qualifies for a VA. Can I go on the loan with my dad?
No. The short answer would be no, because you can only vest title in the veteran and spouse, or if there's a surviving spouse, from the veteran deceasing, then you can vest as a VA loan as the surviving spouse. Now, if you do a VA loan that has someone on the loan other than the veteran and spouse, then you would be looking at putting money down. Usually it's going to be about 12.5% down payment that would be required to do that.
12.5%?
12.5%.
So then you might as well just go FHA.
You might as well.
Right. So
yeah. Unless you're just concerned about the PMI, because obviously the VA loan won't have the PMI. Okay. So, and you would still get the guarantee, of the 25%, because it would still be a VA loan. But again, because of the fact that it's not vested in accordance to their normal parameters, then they do put restrictions on us. So, it's like 6 on one hand, half a dozen on the other. You have to put some skin in the game.
Yeah.
So if you're not going to follow along with the regular guidelines, then you would have to put some skin in the game. So usually, from my understanding, it's about 12.5% that you'll end up putting down if you go in the direction of vesting other than veteran or veteran and spouse.
Okay.
But you can't do it. If it's worth it to you, you can do it.
So now I've gotten my pre-approval for a VA loan. We're looked for a house, and it comes appraisal time. So I'm hearing, how many appraisals you have to do for a VA loan?
One appraisal. How many are you hearing?
2.
Why are you doing the second one?
I don't know. You tell me, Linda.
I'm sorry. I'm looking at this. I'm a new homeowner. PMI usually drops off for FHA after 10 years.
Oh, okay. I was going to come back to it, but.
Yeah.
So what did you say? Curtis
yeah, Curtis threw me off. I'm sorry. Let's see.
Yeah, so Curtis asked us, we were talking about FHA earlier, PMI.
PMI, yeah.
Right. So how long does it take to drop off?
It will take you 10 years for it to come off. So now the way to get around that, though, actually would be if you, let's see. Hold on, I'm sorry, Dion. So if you refinance out of that loan, prior to those 10 years, then you can go into a conventional loan, and then you can get that PMI off as long as you're below the 79% on the loan to value.
Oh, okay. But you still, but you gotta be below that, right? So, okay.
Well, with the way that the value has been going up on these houses lately, it's so fast. It's a good possibility that it would be there. I know earlier this year, I did actually have a couple of people that happened with. They had just purchased homes like, less than a year or maybe about a year prior. And within that time frame, they actually did have a little bit of equity. Their value had gone up.
Yeah, gone up. Okay.
Yeah.
So yeah. just off of the appraisal thing, based off the VA, all the VA loans that I've worked with
Mhm.
my buyers on, it always requires us to do two appraisals. I
I
don't
think I have
know.
a second one on the last one that we did that I can recall. I think we only had one. I mean, I
Yeah,
know so like they do the what's that thing? They do the termite inspection. Termite is a requirement for VA. So
and
they're
that was
going
the
to
other
ask.
thing.
Mhm. So
Termite
now
is required, and then the two appraisals. American Federal Lending. Um, they've always, and we don't talk about other lenders, but
So
that's
I don't know if that's the thing for them, because you do have to keep something in mind. Different lenders are going to have their own requirements and overlays and things like that. Now, the only way that I've seen a second appraisal is if they have something called Tidewater. Tidewater basically is when they're questioning what the value is of the home. Like if they come in at a different value than what the price is, they may
right.
ask for a second appraisal because of Tidewater, something like that. But other than that, I've not seen it as a requirement. I can look it up in guidelines, just confirm and be sure, but I've
Yeah.
not seen it as a requirement. Now,
Mm,
again, different lenders, because so for VA itself, the Veterans Administration does not have a specific, strict criteria in regards to VA loans. They don't have a minimum credit requirement. When you see VA loans to 620, that's
mhm.
because the lender, the one who's giving the money, they're saying that. Like I have
Okay.
lenders right now that would do VA loans down to 500.
Wow. All
That's
right.
that's
So,
the lender's thing, you
right.
know. And then I also have some that say they won't do it any less than 580. So the lender has the right, because they're the ones putting up the money. The lender has the right to put its own restrictions, but
Yeah.
VA itself does not have those stringent requirements for debt to income ratio. They don't have those stringent requirements for your FICO score, that it has to be at a certain amount. The only requirements they have is like the termite, and they also have a requirement for something that they call residual income. So any VA loan, they're going to require that you have that you meet the standard for residual income for your locale, as
Mhm.
well as for your household size. There has to be a certain amount of residual income that's there. So that's a requirement for VA. But as far as those other items, they're
Right.
not looking
Right.
for specific credit.
So,
They're not looking for a
so we,
specific.
so while you guys are looking, it's good to shop around because I believe, with the other lender, maybe one of the appraisals was covered. I can't even remember. So appraisals cost about $500. So knowing that
Mhm.
you're doing a VA loan and you might need two, that might be a problem. So
Right. Well,
always.
unfortunately, I just want to say this. Unfortunately, I have seen it where a lot of times our veterans, they're not in the best financial position. They really
Mhm.
aren't. I see a lot of my other customers, they're in a much better financial position than our veterans are in order to be able to purchase.
Yeah.
So, anything that we can do, to be able to lessen that burden of responsibility on them, we want to do that. Now, for me personally, because I'm a broker,
Mhm.
the as a broker, what I do is I kind of do that shopping for them. So
Yeah.
you may say, okay, well, let me look at 5 different lenders. I got 140 lenders I'm looking at.
Mm,
140, okay?
right. Well,
So I mean, depending on what your situation is, like say for example, if you have the lower credit or something like that, then there's going to be something where I would go in and say, okay, I need to find a lender who I know will do the loan at this lower FICO score for this particular customer. So
mhm.
I can put those kind of parameters in um, for a customer, when I'm shopping around to figure out which lender I want to place their loan with. So,
Okay. Do you see our next question that was asking what's the percentage for the required residual income?
so I don't know that it's necessarily a percentage. Let's see. They usually give us a chart, and it's what's left over after you pay all your major expenses, like your mortgage, regular. So the it's basically designed so it can help you to make sure there's money left over. Because again, VA doesn't put a restriction on debt to income ratio. So for them, this is their way of making sure that if you spend a lot of money on your house, that you still will have money to live because you need,
Mm-hmm.
as a mortgage originator, I don't take into consideration like taxes being taken out, things like that. When I qualify you, I'm actually qualifying you based upon your gross income. But we all know the gross income is not the same as what you actually bring home. So it's really designed, where they can take into consideration that you would be able to have something to live off of after. Like, I've never had it where somebody did not meet the residual income requirement, because of course we have debt to income ratio restrictions that we automatically are going to put onto a loan. So you won't do more than 56.99% of your income when you go, with most lenders. We're not going to allow you to do it. So I've never had an issue with them not passing. Now they have a chart. You can actually probably just Google and look it up, because I'm looking at one right now. But they have a chart, and it's not really done by a particular percentage rate. It really kind of depends on household size, amount of money that you make, things like that. Kind of like when you do bankruptcy. Bankruptcy is the same way. They're looking at how much money you make for your household size and what is the normal or median income for your area, and then they base that, upon that chart. So unfortunately, I'm sorry, I'm not trying to be evasive, but it's not a specific percentage that's on.
Okay.
Hi,
So what'd you say?
I said hi, Lakel.
Yes, yes. So one of the things I want to talk about with the VA loan, and what I've seen as a realtor, right?
Okay.
It's really, so it's great that we have this benefit to be able to have this loan, but
Mhm.
sometimes realtors, and I think it's mostly the realtors, lead their sellers to not want to do a VA loan, to accept a VA loan.
Yeah, I've seen that as well. So what I think happens is that people have a tendency, there's a stigma in regards to government loans. So government loans would be anything that's backed by the government. So that's USDA, FHA, and VA. So a
Hmm.
lot of times, what I've seen and heard is that people feel that, like, for example, a VA loan is going to take longer.
Yeah,
Now, I can't really argue with them a whole lot on that one, because unfortunately for VA, there are some things that, one, there's a lot more additional items that need to be done. So that in itself can lead, to the elongation of the amount of time that it takes in order to underwrite the loan. But those VA appraisers, I promise you, I think it's only 10 of them for the whole country, and they all over 75 years old. So
right.
VA appraisers, what becomes difficult is that you can't rush them. Like,
Yeah,
I can say for an FHA loan or for a conventional loan, hey, we're going to pay you the additional fee to have a quick turnaround on this appraisal. We want it back, in 3 days, and they'll do it. VA, you can't do that. If you
yeah.
tell them you want it back in 5 days, they're gonna be like, huh?
So yeah,
So, so I do think that's one of the things that's a bit of the stigma with VA loans in particular. But I think just government loans in general, people are under the impression that the appraisal is not going to be the same, and they're
yeah,
also under the impression that the loan is going to take longer.
yeah.
My FHA loans, I'm doing in less than 30 days.
Right.
I get them
So
done in 30 days.
what I've seen is, so we have conventional FHA and VA. Those are the ones that are most commonly used, right?
Yeah.
So with people are always like, oh, we're gonna go conventional first because it's easier. If there's any issue, there's less. If there's issues, they're not gonna be raised in appraisal for a conventional loan. So then they think, okay, I'll go FHA if I can't go conventional, because again, because of the appraisal and the results from the appraisal, right?
Mhm.
Whether how much work they need to do. And then they always think of a VA loan is a little bit more, appraisal is really more strict. And so then you probably end up having to do more work rather than if it was an FHA loan. So they'll rather choose an FHA loan besides doing a VA loan. Although those impressions are out there, I think that you should always, if you are able to get this benefit, you should go ahead and take the benefit. And then as a realtor, I'm going to fight and make sure, hey, I got a great lender on the side that's going to get this loan done. You
Right.
know, hopefully, typically, I try to steer towards properties that are in better condition so that we know we're not going to have any problems. I'm like, hey, you got a VA loan. We can't do that. But that's FHA too. It,
Right.
you
But
can't.
that's the thing. So when you have a seller that's selling a home that they have done a good job of taking care of, it really shouldn't matter what type of financing, because you don't have to fix nothing because you took care of your house.
Right.
So quite honestly, I agree with you. Why would we even want to put a veteran into a home where they probably gonna end up having problems because the person didn't take care of it? The whole point behind these government loans is they expect people to live there. They're not renting them out. They're not overflowing with cash and all of that. So they want to make sure that things are where they're supposed to be, because nobody wants to move into a home and then 30 days later they got to shell out $5,000-$10,000 because the furnace broke and the wood rotted and all, different kind of things and the government itself is trying to avoid that by putting these parameters in place. You should want a person to move into a house that's move-in ready where they don't have to spend all their money to fix it,
Hey, last question. How many times can I use my VA benefit?
You can use as many times as you want to pay that VA funding fee.
So I had an aunt. I swear she bought a house every few years. I'm like, oh yeah, I'm selling that house, getting another house.
Right.
My VA benefits. I'm like, girl, go ahead. Cause here's
the thing though. Here's the little caveat for that. There's nothing wrong with doing it. It's really designed though to discourage you from that. So the initial VA benefit, the initial funding fee is actually the lowest. I think it's 2.375% that you pay on the initial. But then if you go to another, like you go to a secondary, a consecutive use or whatever, you use it again, now the funding fee is going to increase. Now it might be like 3.15% that you have to pay to use it. So it's really designed where they want you to move into a house and stay there. So the funding fee will be higher. Now you cannot have two VA loans just like FHA. You cannot have two VA loans at the same time. If you're in one, you need to get out of that one before you'll be able to go to another one. Now they do have a thing where this is a little complex, so I won't get into this, plus we're at the end of the show. But they do have a thing where you can have leftover entitlement. Like if you didn't use your full entitlement for the home that you're in, you actually can have a calculation for leftover entitlement to be able to purchase another home.
But you can have two then, or you can only have one, or you can have two.
Two.
So okay. So maybe
that's why I said that was a little bit more complex.
But I thought you have to live in it.
You do. Right, but if you convert one and you leave it and you move into the other one, that other one becomes your primary. But the loan that's on the other VA acquired purchase would still be under VA loan. You don't have to transfer out of it. You don't have
to sell that house. Okay.
You don't even have to refinance it if you have the entitlement left over. But you have to have the entitlement there to be able to use to go toward another VA loan.
Okay.
So there are some little nuances, it gets to be a little more detailed and tricky. So probably not something for us to really discuss today, but yeah, there are ways to do it.
All right, guys. I got an echo coming back, but you don't hear? Okay, great. All right. We're at the end of the show. We want to spend 30 minutes with you guys, just share with you some key information, make sure how to do a VA loan. Like if you're a veteran and this is a benefit out there for you, don't miss the opportunity to take advantage of it, because these benefits are for you. And Lisa's here to help you with the loan. I can help you find a house. So just let us know. We asked you.
We actually have I got a couple of lenders right now. I'm looking at one of the emails we got a couple of lenders right now that are actually doing pricing specials where they're giving lower interest rates for veterans this month too. So if you're already out looking, or you were thinking about taking a leap So look, this would be a really good time for, because we even have special pricing for you as well. And like I mentioned, I try to do credits for all of my vets at closing so that we bring down your closing costs too.
All right. So we ask you follow us on Facebook at our Water Cooler Wednesday. You can find us on YouTube too. If you have some questions for Lisa, as far as our any loans, we cover. Lisa covers conventional, FHA, VA.
USDA, I cover non-QM. So if you're investing in real estate, I can do that. And I also got commercial up my sleeve too. Bam! What you need? I got you.
Right. We'll be there for you. And then once you get through with her, because you always gotta go to the lender first.
Get the money first.
Right, you gotta get your money first, because I don't like to go shoe shopping without your credit card. So I think right. So you need that. So give me a call. I can help you as far as what you're looking for, and we're here for you. So thank you for joining us. It's a great another day.
Have a good night, everybody.
Yes, we won't be here next. No, I think we will be here. Yeah, we here next week. The following week is Thanksgiving. I was trying to get that. Sorry. Bye.